Today, Domain on Australian property prices. Hello again, it's Martin North from Digital Finance Analytics. Welcome to our latest post covering finance and property news with a distinctively Australian flavour. Today, we're going to look at the latest data released by Domain on sales volumes and then home prices. And they say that Australian property sales have rebounded from the low point that they saw in early 2019. But despite the recent turnaround, property sales in Sydney and Melbourne have risen only just above the low point of the past 20 years. As property prices have rebounded in most capital cities, the turnaround in sales in recent months, they say, is not unexpected. Sydney and Melbourne property prices have been rising for about 6 months, with larger increases in recent months. Turnover in Brisbane, Perth and Canberra have also increased in the past few months, and other indicators of market conditions such as auction clearance rates and house price expectations are also more robust, they say. And property sales and property price changes typically track each other closely, with price changes often leading turnover. With prices now rising rapidly, they say, property sales will likely bounce back to more normal levels in the year ahead. But it's unlikely property sales will return to the very high levels seen in the early 2000s. In the 3 months to the end of August, an estimated 117,300 properties sold Australia-wide, and that's an increase of just 1% compared to the same period 1 year ago. And by the way, the recent months are estimates, as official sales data does not include all recent sales. Over the year to August, an estimated 433,500 properties change hands. According to the seasonally adjusted property sales data, turnover reached a low point in the 3 months to February 2019, and since then property sales have increased by around 15%. As a share of the Australian dwelling stock, estimated annual property sales look to have bottomed out in recent months. On this measure, property sales are currently, though, near the 2-decade-plus low reached in the June quarter, and well below the peak turnover rate of 7.4% in 2013. Based on the trend of the past 15 years, it seems the new average turnover rate is around 5.5%, which implies a property is sold on average every 18 years. And property sales have rapidly rebounded in Sydney, with property sales having increased in most capital cities in 2019. Turnover has bounced back most significantly in Sydney and Melbourne. In Sydney, the number of property sales is an estimated 17% higher than a year ago in the 3 months to August. And in season-adjusted terms, Sydney property sales have increased by an estimated 40% since the low point reached in the 3 months to February 2019. In Melbourne, property sales are just 3% higher than this time last year. But property sales have picked up significantly in 2019. In seasonally adjusted terms, property turnover in Melbourne jumped by 20% since the low point over the 3 months to February 2019. In Brisbane and Canberra, property sales in seasonally adjusted terms are also on the rebound, up by 9% and 11% compared to the start of the year. And Perth property sales remain at low levels, but have increased by 11% compared to the start of this year. Adelaide property sales are 2% lower than a year ago, while Hobart property sales are around average levels and slightly higher than a year ago, but Darwin property sales are at very low levels, but are higher than the start of the year. And they say property sales should continue to rise, which will help the economy. In a recent speech, the RBA governor identified that very low housing turnover has been a factor behind weak consumer spending. Another part of the explanation for weak growth in household spending is the adjustment in the housing market. With few of us moving homes, spending on new furniture and household appliances has been quite soft. So too has expenditure on moving costs and real estate fees. So a turnaround in the number of property sales should give the struggling Australian economy a boost, they say. And rising property prices in Sydney and Melbourne should contribute to property sales increasing further, with the market rebound underpinned by interest rate cuts and the expectations of more cuts to come. Property sales, they say, are likely to rise further in the year ahead. Now, against that background, and remember what they're saying is that overall transaction volumes are still very low, let's look at their latest data on home price movements, remembering that these are median transaction values. So to an extent, they're going to be distorted by whatever property has sold recently. And as we know from our other research, there has been a bias towards upper end sales. And this could mean that the median prices are actually somewhat overstated. Anyway, they say that in Sydney, a remarkable recovery for Sydney over the September quarter has marked the end of the steepest downturn since the 1980s. House prices jumped 4.8%, or almost $50,000 to $1.079 million. And unit prices rose 2.6% to 694,840. These are the first quarterly gains since 2017. And they say houses have regained almost 1/3 of the price falls that occurred during the recent downturn, and units have regained roughly 1/5 of the price lost over the recent slump. Despite this rebound, both house and unit prices remain lower than a year ago, and buyers may have missed the bottom of the market with prices reaching a low last quarter. However, prospective buyers, they say, can still take advantage of improved affordability. House prices are 9.9% below the mid-2017 peak, and unit prices are 10.6% below. The September quarter showed house price growth was strongest across the northwest and inner west house markets. Falling interest rates and expectations of further rate cuts early next year, plus the relaxation of lending standards and the re-election of the coalition government, are all factors which they say have accelerated the start of the upswing across Sydney. Part of the strength of the upswing may also be guarded by the length of the preceding downswing. Potential buyers looking for the market to bottom out have had to wait, leading to pent-up demand, with mortgage lending rising in recent months. But despite this, there are still risks that could temper future price increases. These include subdued income growth and affordability constraints. House prices fell 4.8% in Newcastle and 7.8% in Wollongong over the past year. In Melbourne, house prices rebounded for a consecutive second quarter, marking the end of the steepest downturn in over 2 decades. House prices jumped 4.1% in the quarter to $855,428, reminiscent of the increases during the boom, they say. Houses have now regained almost half of the price falls that occurred during the recent downturn. Prices tumbled 10.7% from the December 2017 record high to the trough reached at the beginning of the year, and prices are now down just 5.9% below the peak. Melbourne unit prices have bucked the national downward trend and hit their highest point on record in the September quarter. They had the strongest quarterly gain and second highest annual gain nationwide. Falling interest rates have aided mortgage serviceability, they said. Together with changes to serviceability assessment, mortgage lending has increased in recent months, and the acceleration of prices is also supported by the exceptionally strong population and jobs growth. Over the year, house prices increased in Ballarat and Bendigo by 9.7% and 5.9% respectively. In Brisbane, Greater Brisbane property prices continued to decline in the September quarter, but the fall in house prices was marginal relative to the ongoing decline for units. Brisbane is now the fourth most affordable unit market in the Australian capital cities. Brisbane was one of the only two capital cities to record house price falls over the quarter and the year. The median house price nudged down 1.0% in the quarter to $562,827, falling by 1.8% over the year. And Brisbane units fell 5.6% over the year, making it the steepest annual drop in just over 18 years. Unit prices are 9% below the 2016 peak, representing a $37,000 reduction. Increased affordability has allowed buyers to purchase at a 6-year low, with the median price falling to $325,179. The ongoing decline in units has largely been explained by high levels of supply. Many developments are still under construction. And this has moderated from the 2016 peak construction levels but remains above the 15-year average. Demand and cyclical patterns are also putting downward pressure on Brisbane prices, they say. Queensland has the highest amount of interstate migration, but the number of new overseas residents is well below that of New South Wales and Victoria. And heightened interstate interest has not been enough to counter the amount of new unit construction. As prices bottom out across Sydney interstate and investor interest in Brisbane could contract. However, Domain data shows inquiries from Sydney and Melbourne continues to grow. A similar divergence in property performance was seen in the Gold Coast, where unit prices were flat over the quarter, while the house prices increased there 1.2%. In the Sunshine Coast, house prices increased 0.3% in the September quarter, while unit prices fell 0.1%. The Adelaide property market was subdued in the September quarter. House prices slipped from the record high achieved last quarter. Despite this moderation, Adelaide has been a steady long-term performer, making modest annual gains since mid-2013. Adelaide unit prices underperformed relative to houses. Unit prices slid further from the record high achieved earlier this year. Adelaide units remain the second most affordable of the Australian capital cities, only behind Darwin. And South Australia's weak jobs market has weighed on demand. Unemployment has been rising for more than a year, and the second highest rate behind Queensland, in fact. The state's economic growth has also waned, largely tied to declines in government expenditure. The exacerbated decline in unit prices may also be a reflection of houses being the preferred dwelling stock in Adelaide, as well as elevated levels of unit construction over the last 12 months. Perth remains firmly a buyer's market, they say. Prices are 14.4% below and unit prices are 18.2% lower than the 2014 record highs. Buyers are benefiting from lower mortgage costs and a subtle loosening of lending standards, which could entice some to take advantage of the market conditions. Despite this, the pace of unit price falls has slowed relative to the same period last year, boosted by the first quarter gains since mid-2018. The pace of house price falls has also moderated. There are several indicators that point to improved conditions across the housing market, they say, and the WA economy more broadly. New house construction is below the long-run average, and new developments has settled to its long-run level. The supply of new dwellings has been constrained, helping to create more competition among buyers. With asking rents rising, rental yields improving, and lower purchasing prices, it makes Perth houses a more attractive investment, they say. Perth's house price decline, compared against a rebound in Darwin, means the price gap is closing between the two cities. A typical house in Perth is about $5,000 more than Darwin. And currently Perth is the third most affordable city to buy a house, behind Darwin and Hobart. If trends continue, Perth could become the second most affordable in the coming months. Hobart remains the best performing city for capital growth. Both house and unit prices experienced the strongest annual gain compared to the mainland cities, which had pushed prices to new highs. In fact, Hobart unit prices overtook Brisbane for the first time this year. Population-fueled housing demand continues to influence price growth, but the pace of growth has eased from the booming double-digit highs. Despite the median house price increasing about $12,000 over the year, Hobart remains the most affordable capital city. That said, with the lowest average wage, affordability has become increasingly stretched for local buyers. Hobart unit prices increased 1.7% over the quarter, showing strong performance relative to the 1.3% increase in houses, and Hobart is now the fourth most expensive unit market behind Sydney, Melbourne and Canberra. This is a stark contrast to just 2 years ago, when Hobart was the most affordable unit market. Canberra was one of the only 3 capital cities to record annual house price growth. Despite this, house prices have weakened for 3 consecutive quarters for the first time since 2011. These moderations have been minor, pushing house prices only 1.2% below the December 2018 peak. Homeowners in the nation's capital continue to be provided with steady equity growth, which has risen annually for just over 6 years. Unit prices continue to provide mixed results. Warden Valley and the Inner North saw the largest price falls in the September quarter, while Inner South was the only region to see the unit price increase. Despite prices falling over the quarter, the median Canberra house and unit prices remain the 3rd highest of the capital city markets. And in Darwin, house and unit prices continue to be affected by weak economic conditions that have unravelled since the end of the mining boom. Unit prices declined 3.3% in the September quarter, taking the price below $300,000 for the first time since mid-2008. House prices, however, increased 1% over the quarter. Prices remain well below the peak values seen between 2013 and 16, when mining-related construction was at its height in the Northern Territory. Unit prices are 39% below the 2016 peak prices, and houses are 23% below the 2013 peak. Population growth continues to drag on the housing market, and the decline in migrants from interstate and overseas may have reached a trough at the end of 2018, but economic data remains very subdued. As a result, any upswing in the Darwin property market may still be a while away. So we can summarise the domain's results by looking at the trends across the cities. We'll look at houses first. So in Sydney, the year-on-year movement for houses from a median price perspective is down 1.6%. But over the quarter, they're up 4.8%. But as I say, that will be skewed by the distribution of transactions, which has been at the top end of the market. In Melbourne, prices are flat over the year and up 4.1%, but again, similar issues with regard to the price distribution curve. In Brisbane, over the last year, prices fell 1.8%, and over the last quarter, they've dropped 1%. In Adelaide, they've risen 0.7% over the year, but fallen 0.6% over the last quarter. In Perth, they've fallen 2.4% over the last year and down 1% over the quarter. In Hobart, they're up 2.6% over the year and 1.3% over the quarter. In Canberra, they are down 0.7% over the quarter, but up 0.6% over the year. And in Darwin, they've fallen 4.4% over the year, and they've risen 1% over the quarter. And that gives a combined capital city number of 2.7% rise over the quarter, but a 1.0% fall over the last year. Now we can do the same for unit prices, and again the same caveat, this will be based on the distribution of sales, and so it may well be biased towards the upside. In Sydney over the last year, prices have fallen 5%, but they've risen 2.6% over the last quarter. Unit prices in Melbourne have risen by 6.3% over the year, and they rose 3.7% over the quarter. In Brisbane, they've fallen 5.6% over the year, and they fell 3.4% over the last quarter. In Adelaide, they fell 2.3% over the year, but a massive 5.2% over the quarter. In Perth, they fell 1.9% over the year, but they rose 2.8% over the last quarter. In Hobart, they rose 10.4% over the year, but just 1.7% over the last quarter. In Canberra, they've fallen 4.4% over the quarter, And that follows a 3.4% fall over the last year. And in Darwin, they've fallen 7.1% over the year, and they're down 3.3% over the quarter. So the point again to make here is that these averages will tell you something about the market, but of course may well be masking differences in particular postcodes and in particular property types. Anyway, we'll continue to track this as we go forward, but of course Domain is talking the market up, as you'd expect. But of course the real question is this a temporary improvement in home prices? And if the economy continues to fade, as we think it probably will, how sustainable will this be as we move beyond the spring-summer season, bearing in mind that listings are still very, very low at the moment. It'll be interesting to watch the next few months and see how this all plays out. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.